Good morning, this is John Piper with the weekend video clip, and it's Saturday the 22nd of March, and we're looking at the Dow to start with. In my report yesterday I said that we could be seeing a third wave on the Dow, rather truncated two wave, but three, triangular, four, then this blip down, then a 1, 2, 3. So this could have been a third wave move coming in. What's happened in the event is that we saw the market open up. What's wrong with my mouse today? We saw the market open up and then come straight down again. So what we have now, or at least potentially what we have now, is actually just a simple A, B, C. And these things can change, but that's what we're seeing right now. You need to see a break above this level here to negate that count. So let's just go out a little bit. This is the hourly chart. So how would that fit into this? This move can be counted two ways. It can be a 5, sort of fifth wave there. This looks impulsive, but it could be counted again as an ABC. That's not exactly clear. Then we've got this ABC here we've just been looking at. So I think the key levels here are 16,450, 16,500 on the upside. Breaks back above there would negate any bearish counts, but moves below this level here, just above 16,100, and this level here above 16,000, would suggest we're going to see a retest of this. In fact, maybe that we have seen a major peak, double top as well, coming in here. So it's all there to play for right now. We had expiry yesterday, a fairly mild affair as far as FTSE was concerned, a bit more dramatic on the Dow as we're now seeing. So there could be an interesting trade coming up. Let's have a look at the very short-term action on this. This is a 5-minute chart. You can see the peak, 1, 2, clear 3, 4, 1, 2, 3, bit of a triangle there. So maybe on Monday we'll see one more blip down to complete the fifth, and then some kind of rally, which would be typical confusing market action coming in. And that rally may well be worth looking at as a short. Reference point would be here. Obviously a very strong spirited rally come Monday, with a different kettle of fish, especially if it goes above 16,450, which would negate this particular scenario. But that's one thing to watch for next week. Let's have a look at FTSE now. This is the daily chart. You can look at this two ways. You could say it's a rising diagonal, which is a negative pattern, or you could say it's all some kind of correction, which is of course a consolidation type pattern, suggesting that breakout in the consolidation pattern would suggest we can go higher, but of course we have got this minus development where the market doesn't go, and that's above 6,900. That's a reference point for sellers. By reference point I mean it's where you'd put your risk control, your stops. That's what you use. So there are other ways of doing this. So say we've got a negative pattern on the Dow, and potentially more negative on FTSE. It's been selling off much more sharply. So again, let's go down to the shorter term action here. This is the hourly chart. One thing we're not getting is very clear patterns, in the sense that, well, maybe we are getting clear patterns, but that's an ABC, and that would be a B. We've then got, well, maybe a C, but then we've got some kind of new low here. So there's a possible 5 if you accept the fact that the initial waves sometimes take on patterns that Elliott didn't really mention. But clearly you've got strong support at 6.5, and that is the key level. So 6.5 breaks, and when I say breaks, I mean truly breaks, i.e. a little blip down below 6.5 is not a true break. And this, of course, is one of the arts of trading, is to determine whether something is a true break or not, and the market does everything it can to make it difficult to do that, which is the nature of the beast. But right now, it does look like we should be seeing more of a rally on FTSE. I mean, it has fallen quite a long way. The blip there is a little bit feeble. I mean, a stronger move maybe up to there, completing a bigger ABC, and then a sell-off might be, well, obviously would be a better place to sell because it'd be a bit higher up. But 6.5 is key. I'm looking to sell the market below there, but I'll probably be monitoring it to see what to get out quite quickly if it starts looking like it wasn't a false break and it was in fact a buying opportunity. Okay, I've discussed gold before. Double bottom, again not ideal patterns. I think we've now seen 5 waves up, 1, 2, The 4 could be anywhere here. 5. As I've often said, one of the easiest errors to make with Elliott is to count the fourth wave as a fourth wave rather than part of the third wave. So this could be a sort of sharp fourth wave coming in. If it goes further though, then that would suggest that we are actually seeing a major test of this uptrend. The fact it hasn't reached this level here, I think, is a bit of a positive, in that if we'd seen a move up to there and then a sharp fall, we'd certainly have seen a complete ABC rally, A, B, C. The fact we're selling off from a little bit lower down, whereas it's not a totally conclusive area. It does in fact could just show weakness. In fact, the thing hasn't managed to reach that level, and also of course it's quite a sharp pullback at the moment. But this ideally, if we see something like this, a bit of a buying spike below 1300, then that would be something that you may want to look at as buying opportunities in the gold market. Right, that's all for this weekend. I want to keep it short and sweet. And so there were 3 trading ideas there. Obviously, use risk control. I'll be updating as we go with the daily reports. Next report Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.